Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, D. Corey shares his path from how he broke into Bear Stearns from a complete non-target school right before the financial crisis to how he survived once it was acquired by JP Morgan. Listen to hear why he followed a managing director to a smaller firm in the renewable energy space, as well as one piece of advice he would give to his younger self. Enjoy. All right, Dan, thanks so much for joining the Wall Street Oasis podcast.
Hey, great to be here. Thanks, Patrick.
It'd be great if you could just give the listeners a quick summary of your bio.
Yeah, of course. So undergrad, I went to Moravian College, majored in economics, picked up a little technical side with physics and mathematics along the way. From there, coming from a tier 3 school, took me a bit, but I finally broke in and worked at Bear Stearns doing principal investment, learned commodities, tax-enhanced structuring, survived the merger, hung around JP Morgan, and called it quits, surprisingly, but did a not so uncommon tale of followed my old managing director off into the great frontier, where I built a couple hundred megawatts of renewable energy power as a developer, VP of finance role type, and then followed that market, moved back towards the buy side, doing asset management for all sorts of renewable energy for Sumitomo Corporation, one of the big 5 Japanese trading companies, which led me to where I am today, working with my partners at Asia Atlantic. And we do a bit of the same of what I just described. We're strategic advisors working on ESG and other impact-oriented investment structures.
Great. Thank you for that. So let's start all the way back at your undergrad. So Moravian College, where is that?
My favorite question. Where is Moravian? It's in Bethlehem, Pennsylvania.
Okay.
It started in 1742, one of the oldest colleges in the country. I always say they've been keeping the secret ever since.
And you did the decathlon.
Yeah, that was, I majored in track and field, right?
Yeah.
A little bit of jack of all trades type. So I was a 3-sport athlete in high school, and when I got into college, I just knew it was a big part of me, big part of how I focused.
Tell me a little bit about why Moravian? What drew you there, and tell me about a little bit of your upbringing and kind of like what were you always thinking finance, or when did kind of finance come onto your radar?
So I went to Moravian for 2 reasons. One was that they were affiliated with other schools in that area. Lehigh was one of them, and I had a engineering track in mind when I went there.
Okay.
So I started off majoring in physics undergrad, picking up econ minor, a psychology minor, and Moravian let me into a program where I got to design my own curriculum. Just soup to nuts. It's a liberal arts school, so the standard formula is 2 years of core classes, 2 years of your major.
And they didn't force you to do that?
They did not. So I traded classes like basket weaving for differential equations, which certainly was a little more challenging of a route.
For sure. So you wanted to make it hard on yourself. You were basically.
Turns out, yes.
And did you do well, or was your GPA kind of mid 3s, or what? How did you end up there?
They let me out early for good behavior.
What does that mean?
So I had less than a 3.0 GPA graduating.
Okay. So you had a less than a 3.0. You went to a school that most people haven't heard of in Bethlehem, Pennsylvania. And so how in the world did you end up at Bear Stearns?
All right, throw a little magic in the middle.
Yeah.
Um, so I knew what I wanted to do in essence.
Hmm.
Um, Keep in mind, I grew up right outside New York City, so the city and the finance track was always something I understood.
Sure.
So having that more technical, quantitative reasoning background always sent me back that way. And I just did the old-fashioned method of networking. Being a 22-year-old coming from a small school, you didn't know a lot of folks, but there were a couple strong contacts that I didn't abuse, but I relied on for guidance and asked for. You never ask for a job; you always ask a question and advice.
Hmm.
Uh, Now, somebody's at this point in my career, I totally understand it. Everyone's favorite topic is themselves. So ask somebody, hey, how did you get there? And guarantee somebody who likes telling their story will be happy to share it with you.
And so you said good old fashioned networking, but even, I mean, it's not like you graduated like 30, 40 years ago where maybe some good old fashioned networking would get you in the door. So it still surprises me. You graduated what, in '06 or so? Or what was it?
Oh, 05.
'05. So like
Yeah.
the
Not the
economy.
Stone Age.
So yeah, I mean, maybe the economy was good. So maybe they were just looking for bodies. And what do you think it was?
So I definitely stepped in off cycle.
Yeah.
I just happened to be in the right place at the right time. So when I say good old fashioned networking, I mean it's like you work. I mean that you work really hard to be in the right place at the right time by being in every place you possibly can be at all times maximum.
So
I
what
don't
were
have,
you using? Were you using, was LinkedIn even around then? No, it probably wasn't. How are you
it
networking?
wasn't a thing.
So,
There were other job boards at the
yeah.
time where I could get a sense of flow.
Hmm.
Uh, what my break ended up being was that a, a family friend
Hmm.
knew somebody who worked at Bear Stearns, and
Okay.
this almost feels like a movie every time I describe it. Um, Family friend said, "Hey, I talked to my neighbor who worked at Bear Stearns. Let him know that you have some questions about what it takes to get into a company like this, and he'd be happy to talk to you." So I took that as a 22, 23-year-old kid as, wow, somebody's willing to help me. So the next morning I picked up the phone. He worked on a trading desk. 8:30 a.m. Picked it up. Hello, Mr. So and So. This is Dan. Thanks for taking my call. And I barely got anything out. And I'll just PC the rest of the language. But he just says, "Listen, kid, I do not have a job for you." You can imagine he used a little more colorful wording. And like, wow, everything I was expecting out of this phone call just went sideways.
Mm,
So I apologize, of course. Hey, sorry I came across that way. This was really like 10 seconds into the phone call.
yeah.
And I explained I was hoping to ask some questions. You give me some guidance. Uh, he again says, "Look, I just don't have a job for you." I said, totally understand. I'll tell you what, you sound really busy. I'll call back another time that you have more time to speak. Slam! I hang up the phone because I wasn't going to get anywhere. So, oh my god,
You hung up on the guy?
hung up on the guy. Yeah,
Do you feel like it was like you panicked in the moment and like he was just pushing you and you just like
it
slandered? You
was a
felt like,
it was a little bit of fight or flight,
and you
but
flew.
somewhere like something calm, cool, collected took over me because I set myself up to call him back the next morning at 8:30, and he didn't have enough time to say no. Right.
Right. Okay.
So
So you basically, you hung up so you couldn't say no or like don't bother or whatever. And so you ended up calling him again the next morning.
yeah, when he
Okay.
was polite enough to give me the head of global HR's personal phone number, which was a total train wreck in itself. But what this person accidentally did was he turned me into a referral by putting my name into the stack. So then you can imagine somebody's job in HR is to create all of these filters. So they have a stack of 100 resumes, right? And take the top 90. No, let's consider some 10. I mean, I've hired myself. I know the process. I don't even
Yeah.
see all the applicants if I wanted to. My HR teams would never even show them to me.
Right. So
Um,
you're basically, you're now in as a referral, even though, so tell me when you said that other call when it's like disaster. But tell me a little bit more about that call. So you called him back, you left me hanging. And is he annoyed the second day when you call back?
I think he was getting the point that I was just gonna hopefully get some advice out of him. So he passed the buck along. So that's yeah. I just need some help guiding the beginning of my career.
And he said, okay, well, just talk to HR. And he
Yeah,
gave you their phone number
gave me a phone number of the
and a
person to
name.
call and a name.
Okay.
And little did I know that, I mean, this was like the managing director of human resources, who was
This was at
very
Bear?
polite.
At
Yeah,
Bear?
this is it. It was truly a small shop, in that sense. Very flat dynamic.
Okay.
Um, that guy was very helpful, very friendly, very direct. That there's nothing he could do today on the phone other than, keep my name on file.
And were you pushy? Were you saying, I'm looking for a job? At that point, were you asking, when it's a process? How do I get what were your questions? And if you can remember, I know it was back 12 years ago.
I really was just trying to understand what the process was to get in,
Yeah.
and I felt like I got as far as I humanly could through this avenue,
Okay. So
and
he
that
basically says, yeah, just I have you on file. There's nothing I can do right now. How did it end? Call me back in a couple months. Call me back in a
yeah
month.
yeah get like a soft lead, but that wasn't how I got my start at Bear.
Okay.
That's
So
how
what
I got
happened?
my yeah. So what I ended up doing was then going back out to job boards, finding openings, and I did find an opening for an off-cycle analyst role that I made a point of applying to. And when my name popped up, 2005, 2006, there was some sort of system that I made the 10% cut because I was a referral.
You're saying the
So
10% cut of people who don't just get thrown out in the trash right away.
exactly,
Okay. So you
yeah,
were actually your application actually got viewed by a human. Okay.
right.
So go ahead.
So so that got me viewed. Like I think you said it. Um, from there, the hard part I knew coming from my background was getting my foot in the door, getting that network, and instead of having somebody intentionally refer me, uh, just figured out the system and I got myself through. When I finally got my resume in for a job that I thought was appropriate, I had to do the same standard interview. It was a lean, mean shop, and interviewed and pretty much got an offer when on my first in-person interview.
They just
So
on the spot they gave you the interview or the offer right there.
yeah,
So do you feel like they knew? Tell me a little bit. What were you specifically interviewing for? It was on the principal investing side, or what was it?
yeah, it was a commodity arbitrage type of group,
Hmm.
and this was they called them we called it strategic structured transactions. So it was a lot of um, finding things that were related to tax credits. So if you had and other sorts of anything really, how can I describe everything under the sun? It was anything and everything under the sun.
But
What
you're
that
actually
group
trading. You're actually trading it. You're on a desk with the monitors trying to track different markets, or what do you? What do
There
you?
were day-to-day traders. My role was more long-term structured transaction support. So
Okay.
I was supporting new deal transactions, M&A in-house support, as well as just, after the close, we were we're a tight shop, so it was asset management uh, to follow all that.
Okay.
This group ended up becoming what was later known as Bear Energy, and one of the major investments that J.P. Morgan bought Bear for. So their entire trading and large scale power plant investment operation was the broader, more publicly known stuff, other than like lumber trading or um, doing synthetic coal fuel transactions, commodity prepayments, working municipal and public bankers. Um, it
So
was
like, but
a
you're
interesting
hired to
time.
come in, and so it's Bear Energy. So you basically came in and like, are you making markets? Are you like, how should I think about it in terms of like, is it sales and trading? Is it, you know, how do I think about it as like as an analyst or an associate, you coming in, it's your first job at a school. What were you doing day to day? Like you're on a team. How are things structured? What's the training like?
Oh, sure. So it was a lot of on-the-job training.
Yeah, they just threw.
Really, nothing was formal. Like I said, being off cycle,
Hmm.
it really took me out of any sort of rotational program. I
Right.
was hired directly onto a group, and the group had we had a mortgage portfolio, and we needed daily risk reporting on that.
Hmm.
And we were also originating the mortgages into a larger portfolio of that. So it was a kind of a catch-all.
Hmm.
Um,
So was this like almost the heart of the financial crisis? Would you call this the heart of the financial? Because you're dealing with the mortgages,
oh
and when you
yeah,
talk, when you start
oh
talking
yeah.
about mortgages in 2008, so tell me a little bit about that. The mortgage, I see mortgage default swaps, all that, fixed for floating interest rate swaps, all
Yeah,
this
that
stuff.
was
This is the heart of the financial crisis. So tell me a little bit about what was going on in there. I mean, printing money, things were going great, I think, through 2007, where there were some cracks maybe, but when can you just guide me through that timeline and just tell me like what was it like at the beginning, and then when did kind of things start? Did it all just crumble super fast and shock, or was there kind of some writing on the wall?
the for us for the way we had things positioned.
Hmm.
One day we were funding a portfolio and writing off the default risk, and the next day we were not. We had an investment bank's job is not to sit there and incubate risk. You're supposed to take it in, parse it up, dole it out.
Hmm.
So we had a sizable portfolio of commercial notes, and the default risk was basically bought out at like 150 bips.
Hmm.
It all worked in our structured transaction. Life was good, and part of my job there was to build out another $100 million worth of commercial notes, which we did successfully. Got everything all tidied, and 2008 came around when January, sitting in with our team meetings, saying, okay, this is now we have the whole portfolio put together. Let's go get rid of the risk. I should mention this is a tax credit portfolio, so it was way more complicated than standard, bucket up and send it out CMBS type of stuff.
Okay.
Um, so, I mean, here I was, analyst or associate Dan, trying to put pitch books together when the market's going sideways, and I just came back like, we can't afford to sell out the default risk at 35% per year because everything just blew. Yeah, so it went from 150 bips to 3,500 bips
Jeez.
in the month that we were trying to trade all this stuff. And that's that totally overlays with JP Morgan's
And so
stepping in.
you weren't able to basically, your group wasn't able to basically offload that risk fast enough
Right.
to keep the bank solvent long enough.
Well, our group is really small.
It was a tiny fraction of the
Yeah,
overall
I
problem.
mean, drop in the bucket.
Dropping the bucket compared to what was happening in the mortgage side, right?
Right.
So,
So we weren't sitting on any default issues.
mhm.
Just say at that time, some of our credit was AAA that in the portfolio, so we really weren't concerned.
Okay.
Uh, However, it still wasn't the business model.
Okay.
So
Yeah, it's tough for me to wrap my head around in terms of everything that was going on at that time. I'm not in that type of, I worked in restructuring and banking and more of like a little bit of M&A, and then did private equity. So this whole world of structuring and selling and bringing on products and selling them off is interesting. I just don't understand. I don't really understand it. It's hard for me to understand and wrap my head around. I don't know if you can maybe give an example to the listeners to help us kind of like wrap our head around of like, can you talk about a specific deal you did or how you'd think about it? So this was like the
yeah,
energy, mostly you're dealing with like energy products or
right.
tax arbitrage or whatnot, but how would,
Um,
like, what's your role? And then like, what's like an example deal, I guess, that you would work on or project?
sure. There's a great trade I can talk about.
Mm-hmm.
Um, it was all tax arbitrage. So
Okay.
my company, Bear Stearns, has a 40% tax rate.
Mm-hmm.
Every dollar we take in, we're paying 40 cents out. Uh, we purchased an energy facility from another utility that had a lower tax rate. I think they because of a backlog in tax credits that they had,
Yep.
they were probably paying about 10%
Tax.
effective tax rate.
Yep.
So it just wasn't hitting their internal rate of return requirements on these investments. Uh, Not to get too murky into the science of it all, but it was a synthetic coal fuel facility. So you're taking coal bricks, you're smashing them up, turning them into powder, mixing in the chemical equivalent of pine tar,
Okay.
rebricking them, and selling them off.
Okay.
Uh, and then that process entitles you to a tax credit per ton.
Got it. And so
And
that tax credit was so you guys actually purchased the company?
yeah, so we went out, purchased the operating company,
Yep.
and
And that
then
gave you access to those tax credits, which shielded some of the income from Bear.
right, yeah. So that was business model 101 for us.
Okay.
We're sending tax credits up to the mothership,
Got it.
and they're paying us on the dollar, essentially.
Makes sense. Okay. So I mean, but did Bear want to be in this space? I mean, or was it being done across all different industries, or was energy kind of real focus for you guys?
For us, energy was a real focus.
Maybe because there was more tax credits there to be had.
Yeah, it's a pretty liquid market
Yep.
for these types of transactions, basically because there's a really deep market in principle.
Mhm.
Commodities trade on their own right.
Yep.
So tax enhanced structures it's easier to hedge. The same year you're talking about markets blowing out, the trade I just described, we were planning on collecting, basically earning our PL in terms of tax credits, and that was the year that oil spiked at 100. So I had a hedge on this project that I would manage every day. You talk about throw a little day-to-day work in there,
Mhm.
that just went, well, I guess right side up. We just had it there to protect the phase out of the tax credit, not which was something like from $55 up to $71 per barrel, and then oil spikes at 100. So same kind of stuff. I pull all the stuff together, have a quick team meeting, say, hey guys, bad news, we get no tax credits this year. The tax credit trade failed, but good news, that hedge that we placed just paid out like $80 million. Here we go. So
It's awesome.
taking
So
risk,
you're
sending it out.
it worked out in the end. So tell me a little bit about, as things started to kind of go south, what was it like on the inside? I know you said one day things started kind of the spreads widen on some of your trades, and you couldn't do the deals anymore. You're upside down. That was in your group, but
Right.
just kind of firm wide, did you know that it was systemic, that it was kind of across the firm, there were issues? I mean, you're
It
still pretty
it
junior.
really did happen fast, I would say, in that regard.
Mhm.
We were working closely with the commercial mortgage origination group,
Mhm.
and they were on the front lines of fault.
Yeah.
There was the initial funds were closely related to a lot of that trading volume, and
Mhm.
it was harder and harder to communicate internally with groups that are probably having some uncomfortable conversations within their own team meetings.
Right.
So, like looking back and piecing it together, you can say, "Oh, that was a good clue. Okay, that was a telling moment." But at the time, it wasn't. Nobody was running down the hallway, with their hair on fire.
Right.
Uh, Up until one weekend, and nobody was running down the hallway at all.
Mm. And so what was that like? What happened? You came in one day and what they said, go home, or what?
No, like I said, so
You just
uh,
JP Morgan
yeah.
came in. And so
Does
talk to me a little bit about that. What was that transition like?
So, as Bear was a very flat organization where you could do a whole bunch of different things.
Mhm.
And what I learned career path wise was that what I was doing, I think you said it's a little bit of this, a little bit of that.
Mhm.
In JP Morgan, it was a little bit of this silo, a little bit of that silo. So my job in one company doesn't necessarily exist in another company.
Yep.
Uh, so I watched part of what I'd like to do, the energy side of business. That was all shifted completely out of New York, moved to Houston. The real estate, the mortgage tax arb portfolio that was moved semi in New York, only because I was there and there was some other admin on site,
Hmm.
but all headquartered out of Chicago. And then other like new business that we were chasing after just went off into its own different individual books.
Got
So
it.
I kind of got chopped into three, and then offered one third of all of that. So it's like you can here. Let's.
Was your pay chopped in a third, or you just seriously?
Yeah, you doing the math that I was doing too. I can follow this. Uh,
Let's talk a little bit about pay then, since we're on it. So at Bear, were you getting paid really well to do this kind of a little bit of this, a little bit of that during those years leading up to it, the crisis?
yeah, yeah, absolutely. It was a very risk reward or oriented model.
Do you mind sharing like around a range of what you cleared in the couple of years that you were there?
Um,
Doesn't have to be
in
exact, but
Yeah, it's awkward,
yeah,
but it's helpful.
yeah.
Let me put it in context. After my time at Bear, I realized that people refer to their bonuses in percentages and not multiples.
Mm-hmm.
And it was a not a culture shock, but just I'm like, oh yeah, right. I was getting used to that. You basically your base salary is enough to keep you in an apartment,
Mm-hmm.
uh, fed and clothed.
Mm-hmm.
In New York City, yeah, I think my base was probably like 60.
Yeah.
So that's not going too far.
No, that's fair. Okay, so you're kind of in this transition, but things are getting chopped up, moved around. You feel a little bit like, I don't know if there's a future here. What makes you jump? You followed your uh, somebody from Bear.
Yeah. So my old senior managing director, who actually hired me,
Mm-hmm.
uh, he was gone pretty much right away, along with a lot of other senior folks
Mm-hmm.
at Bear. And he went off and did the same type of math that we were doing all day long. I can't stress enough. It was just math all day long.
Okay.
And he ended up with a renewable energy developer, which is a bit of what he and I were working on before he was let go from Bear,
Mm-hmm.
and it made a lot of sense. It was the same kind of modeling, but just from a different side of the transaction.
The
But
economics made sense, meaning like the to be in that space at this point, or it made sense to have you come along because you were part of the team.
well, that and the career path for me made sense. One no having a team that you already know how to work with day one is always huge.
Yeah.
Uh, Building rapport is invaluable. Knowing how to communicate with people that you work with is everything.
Mm-hmm.
Um, the economics were certainly good. So coming on to a smaller private shop was exciting. It was enticing. There was the future that I felt like had an impact in. If you have an impact, you tend to have some control on it.
Yep.
And also following and getting to be a subject matter expert instead of a, a like a highly sharpened, focused generalist on a bunch of different markets.
Fair.
That was I felt that was a good move, and I felt comfortable in that decision.
And so when you say renewables, is it specifically only, were you guys just doing all wind? Were you guys just doing, or were you doing all types of renewables?
Yeah, it was all wind.
Okay.
So that company was based in the Midwest
Mm-hmm.
and focused on large scale utility scale wind generation.
Great. And so you were there for many years. It sounds like you had a pretty good run. Why change? Why leave?
So the whole market was dependent upon a tax credit that expired.
In 2012 or 13?
12, yeah.
12. So
So
it started getting rocky in terms of,
yeah, there was a big rush, and you can see the history of renewable energy is ups and downs.
mm-hmm.
Every time the tax credit is set to expire, there's a huge rush in the year before it expires that basically can't forward cannibalizes all the inventory of developments.
Yep.
So we did a whole bunch of that. We forward sold some projects, and it just seemed like my job was done,
It
and
was over.
it was over.
The
I
run
did
was
my
over.
job. Now
Yeah.
please go home.
Was the thought process when you kind of came in there, you knew that was coming down but you thought, hey, there's a good 3-year runway and who knows how it'll develop? Was that the thought process going there before you jumped, or was like, hey, I just know this managing director, I'm comfortable working with him, I trust him? Like when did you realize that it was done? It had to be before the credits expired, I assume. Or no?
Yeah, I like like I would say that the 12 months leading up to then, you're doing the math and you're seeing everything accelerating. And you know what's going to happen the 12 months after then.
Yeah,
Um, but no, the impetus to work on this team there was not so much that we could just be hired guns to go out and develop projects, but really to take this company and bring it public. This was all uh, pre Nextera and other big firms spinning off and doing their yield co's, but our whiteboard was essentially the same exact thing of taking a developer and bringing them public, raising capital at that level. So looking forward and seeing a 3-year pipeline of stability, definitely a thing of comfort,
mm-hmm.
but also seeing the opportunity. Hey, if it's successful, that's fantastic. If it's not, I'm not going to be starving to death along the way
Right,
of taking this company and turning it into a real operating company.
great,
I think that was um, that was the hook, or always the carrot to keep things going.
for sure,
And it's a tough choice. Do you develop a project and sell it, or do you bring it all the way to the point and try to raise capital? It's an ebb and flow with a developer.
for sure.
Uh, how to manage that?
So you're the vice president of finance there. You kind of can see the writing on the wall 12 months leading up to it. So did you start kind of putting out feelers right away, or did you wait a little bit? Were you so busy that last year that you just waited till you were done?
I was just working it hard all the way up to the end.
Yeah.
Um, once I was once I was out of that role full time, I did a couple other I call them just like personal side projects,
Mm-hmm.
things that I explored that I could. I wasn't living paycheck to paycheck, so
You had saved along the way.
yes, I'm good at squirreling things away, recession proof, and as proven a few times here.
That's good. That's
Um, yeah, so explored working on a real estate fund with a college friend,
mm-hmm.
and even help him set up a bit,
Mm-hmm.
co-invested a bit, but then decided I didn't want to go on that exact route, so went kind of right back to what I just developed as my now core, and found a position essentially managing the portfolios that I was helping put together by on the development side.
So you went to a large corporate. You went to Sumitomo,
Right. Yeah.
correct? And so you were helping run their renewable energy infrastructure group, or busy, or actually purchasing new ones, or managing that portfolio, or divesting, or both.
So my primary role was managing the portfolio,
Okay.
uh, and dealing with the total process of asset management. But I was also working on if you're running the portfolio, you're part of the BD team. Uh, so anything that came into the portfolio, I had a soft, not quite official veto. I could at least say, yeah, we should probably stop looking at this project.
Okay.
Somebody might still want to do a whole bunch of work on it and see if it works and see if it changes. But it was um, a hybrid role.
Got it. And did you enjoy that time there? Because you were there for a good 6 years.
Yeah, no,
Good run.
I did like it. Very salt of the earth type of environment.
Mm.
Uh, it was interesting to change everything from wearing a suit and tie, hop on a plane to go out, and God forbid you wear a suit and tie to a power plant, right? Because it's really we owned steel on the ground, but
Yeah.
same type of math and analysis in the background. You're generating electricity to make enough power to make enough money to pay your operating expenses, and you're dirt broke again, and the projects don't make sense unless you earn the tax credit. So there was all
Same
same
math.
tax equity. Yeah.
Is there anywhere listeners or someone else who's interested in the renewable energy space or the math that goes behind all of this stuff where they could find or learn more?
Wow.
And if not, that's okay. If it's something where you just had to learn on the job or
Yeah, I can't think of a single class that I've looked at, um, undergraduate or graduate alike, that really gets to the heart of tax equity. You end up getting into an accounting track where people describe tax accounting,
Mhm.
but it's really not tax account trading that you study. That's really it's kind of a mix of commodity trading in itself. You
Okay.
know, a dollar's a dollar. Tax rate is a tax rate,
Yeah.
but you might have a different one than I do, and no
Mm.
different than poker. I might have a pair of aces, and you'll still beat me with two fives and a seven, right?
Right. Fair. Okay. So you're there for a good run. You're it sounds like doing a little bit of everything there, and then you end up kind of started. Is Asia Atlantic? Should I think of it as your own shop? Did you go out and were you co-founder there, or is it something that had been established?
Uh, Established shortly before I came on board.
Hmm.
One of the co-founders was somebody that I worked closely with at Sumitomo.
Okay.
So from there, and I was able to add in my own subject matter expertise,
Hmm.
and my own view on risk and methods and process into my colleagues and their own methods on risk and networks and private equity backgrounds and well, having experience working in the World Bank and understanding global economic impacts. Uh, we all tie it together. So
You know
that's something that
what strikes me about your background is, you go large firm, large firm, small firm, and
a
you're following,
little bit of bracketing.
and you're following your almost your mentors and the people that you work closely with at those larger firms when they move
Mhm.
out, which is kind of a nice way to make that jump, that the riskier jump a little bit less risky, so it becomes less personnel risk and more kind of business risk only.
Right. Yeah. I mean, that's risk management 101, though.
Hmm.
If you have too many unknowns, then
Yeah.
you can't manage them. You want to quarantine your unknowns
Hmm.
and focus on things that you know are a challenge.
And
And
so tell me, at your current firm, are you doing, what percentage would you say is like consulting versus actual investing in projects,
uh,
like
about
advisory?
50-50,
Okay.
really. So we do work on a lot of the business practice advisory, uh, but it's an important task, I would say, to be out there in the industries and knowing what kind of deal flow is out there. If you're just taking that as a secondhand report, just trying to read whatever IHS said about the market today, then well, you don't need me. You just need IHS.
Right.
Um, I think a big value that we try to put forward is being able to hang up the phone with a client and then pick up a phone with somebody that I think that client then needs to connect with based on whatever we discussed with the client.
Fair. Yeah. I
Um,
mean, you're very well connected in the renewable energy space, obviously, at this point.
right. Yeah. So,
Sure.
and being able to understand what a client needs
Hmm.
from a discussion with them that's value add.
For sure.
Otherwise,
So what's next for you?
so next is actually something totally outside what we just discussed.
Yeah.
Um, Part time, I am with the National Guard as a cavalry officer.
Great.
So, mixing in between my busy schedule of professional and family duties, I'm going off to armor school.
And when is that? Is that going to become a full time thing, or is it something where you?
No, it's not a full time thing. It's just it's a way to put some of put some of the goodwill I got back into local community. Hopefully,
Great.
if they need. But it does have some full time training and
Which
some
will be
addition.
brutal. Which will
Yeah,
be.
I mean, there's a little 12-year-old in me that's like all excited about driving a tank, right? Like,
Yeah.
what little kid doesn't want to do that? Um, but then there's the responsible practitioner in me that's also saying, well, okay, so with this, you're seeing a different side of infrastructure.
Mm-hmm.
Honestly, when the people I train with, when they're going through a base, they're just worried about how far the next mile run is, and I can't help but look around and just think, man, who got the contract for that solar panel array on the side? And I just get lost. The next thing I know, the mile's gone. Easy peasy.
That's great. So anything else before we call it in terms of, you know, best lessons or anything you learned or something you would tell your younger self looking back on your career to date? You've been out of school now for, what is it, 14 years? 15?
Yeah, fine. Yeah,
So,
going on 15.
yeah. So what would you say is kind of a takeaway, or what would you tell your younger self, knowing what you know now?
Everything you know, be confident in it, but keep testing it. It's like
Okay.
sometimes you have to believe in yourself, and I'm really stealing from Rudyard Kipling.
That's fine.
Um,
It's not
it's
stealing if you quote him.
Yeah, there we go. Um, make allowance for other people's doubting too, which means that everything you know is you can go forward and lead your plan, but then feel free without having to beat yourself down to reevaluate where you're going along the way. Set up a checkpoint. You have like you described, a 3-year stint I had. At 1 year, 2 year, just create some sort of milestone to just stop, pull yourself out of your shoes, and
Mm,
make sure that this is what you want to do. So,
that's
and
great.
then or figure out how to make it be what you want to be.
Fair. We'll leave it at that. Well, Dan, really appreciate you taking the time out of your day to share all your wisdom and to tell us all those stories, those crazy stories, and back in at Bear Stearns. Really appreciate it.
My pleasure.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.